All right, guys and gals, back to work. Boy, fantastic job today. Hope everyone made some money out there this morning. And we're back to work tonight. Get some beautiful ranges. Had that debate tonight. And of course, tomorrow's CPI report. You know me, I love range-bound markets. Plenty of ways to make money tomorrow. I have a number of trades I'm tracking for tomorrow. We're going to cover all my favorite entries, my exits. By the time we're done this video tonight, you'll have an easy roadmap to make some money on Wednesday morning as well. As always, thank you so much for tuning in, supporting our channel. But enough of the intro, though. Let's go make some money on Wednesday morning. Boy, charts are all prepped up, as you can see. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues on these charts right now that are telling us where the winning trades are waiting for us tomorrow. One of those big clues is right here on these 60-minute hourly charts. Looking first here at the S&P 500. We, of course, talked about this last night. We are bullish overall into a trading range. That range acts as a magnet, and buyers are trying to roll this thing back up into that trading range. We're bullish overall, but we know a lot of bearish momentum over the past week and a half here. All of that bear momentum going lower. These sellers are not going to give up without a fight. So expect this thing as it goes higher for those bears to be trying to shoot this thing back down and take out that low. One big important clue on these hourly charts. We're overall bullish, but very bearish there in the short term. Keep absorbing those bear shots going lower. We'll keep looking for those long side trades going back up into that range overhead. That's the big picture now on the 60-minute. But you know what this doesn't give us? It doesn't help us time the entries. We get some beautiful ranges on the faster time frames, help us wrap this all together and time the best entries to make money tomorrow. Before we dive into those entries though, let's check schedule for tomorrow, because tomorrow, yeah, is definitely not your average Wednesday. We of course have that debate tonight between Trump and of course Kamala Harris. But tomorrow morning though, all eyes are on that CPI report at 8:30 Eastern time. We know there's going to be some fireworks around that number tomorrow morning. So my game plan tomorrow is get there early, get the charts all prepped up, see how the number comes out, and then trade the reaction with us tomorrow morning in our trade room. We open up at 8 o'clock Eastern time, the front row seat tomorrow morning. So debate tonight, but more importantly, the CPI report tomorrow morning. Now, let's go talk about the entries for tomorrow. The 60-minute chart tells us we're bullish overall, but bearish here in the short term. But remember that the hourly time frames, they're good for big picture, not going to help us with the entries for tomorrow. I like to use tick charts for entries. This is a 7,000 tick chart, all the time frames in the upper left-hand corner. And in case you're watching for the first time right now, this is the 21 EMA. It is pretty much the only indicator we need to find lots of winning trades each week. There's one very big clue on this tick chart, and that of course is that trading range. Ranges act like magnets, and ranges love to rotate back and forth. Now, you know me, I love these range markets because they're so predictable, so consistent. Whenever I see a bull range like this, bullish market into a range like this, there are four different types of trades I always look for the following day. Let's talk about the first one right now. You'll notice I've done a trend line off these highs. I brought it down at that low. You'll notice where that channel lines up with that trading range. There might be some money to make buying the pullback off the low of that channel. The problem though is we're buying right into overhead resistance right now. And with those bears involved on the hourly chart, I got to be a bit careful on the entry. In these situations, this is where a bear trap pattern will come in handy. What's a bear trap pattern? I want to pull back, lower that channel. I want to trap in the sellers trying to short this back down. Watch closely here. It's bears try once, higher high. Bears try twice. I need a bear trap pattern because bear traps or traps overall are going to get me in at the lowest possible price. My concern here is I'm up high, right? I'm way up high on this. I'm going to buy as low as I can. And to do that, I'm going to use a bear trap to get that risk reward ratio dialed in the way I need it. The second trade I'm looking for tomorrow is a lot more desirable. We know that ranges love to rotate back and forth. I would love to buy off of this low. Now, when I buy a shallow pullback, the concern is risk reward ratio. That's why traps are so important. When I buy a deeper pullback, risk reward is no longer the problem. The problem now is momentum. When I see a strong run down like that, these sellers are going to want to keep this party going. That momentum says, I'm not going to blindly buy down here. I'm going to wait for price to pull back to that 21 EMA. Let the sellers try a couple times. Why? Because once those bears try twice, now I have their stops right there. And if you get stopped out of your short trade there, you squeeze those stops, right? You become a buyer. Look what happened over here, right? Market runs lower, bears try once, bears try twice. This is that failure pattern we teach so much in our free video course. Remember, risk reward is great down here. Great risk reward there. A lot more desirable trade. But again, with that comes a price, and the price is momentum. Now, one of my favorite trades on this, after we get that bears once, bears twice, and that failure pattern, we know that ranges like to rotate. So as we go higher, what I'll do is I'm going to look for a bear trap combination or a bear trap add-on. Now, bear trap's very simple. Look for a shallow pullback that separates off the moving average, mark off the higher high, and then look for a pullback right below that low. In our trade room, we call this a failure pattern into a bear trap combination. Remember, ranges love to rotate, so leave that target up around the high of that trading range. That is 2 out of the 4 trades I'm watching for tomorrow. Another trade I'm watching for tomorrow is a breakout pullback. We got CPI tomorrow morning. If this thing continues going higher, I'm looking for a breakout pullback off of that trading range. Now, breakout pullbacks are very, very specific types of setups. When I think of a breakout pullback, I think about a two-legged pullback. What's a two-legged pullback? It's simple, really. Think about one leg, two leg, and of course, in our free video class, we talk about measured moves. I think about a measured move or an ABCD that goes a bit too far. So, trade number 3 I'm watching for tomorrow is a one leg, two leg, get underneath that moving average. Think about a measured move that goes a bit too far. I would love to use the top of that range as an area of support. Now remember, I don't have a crystal ball. I can't predict how far that pullback will go. For all I know, it'll dump and roll all the way back down again because, again, ranges love to rotate, and I will talk about that here in just a moment. Don't you worry. So I'm not going to try to pick the bottom on that. What I'll do is I'm going to wait for the price to pull back. Once those bears try once, try twice, now they're trapped. Now I have their stops to hit. That's a failure. Remember that trap pattern before? Yeah, let's get that shallow pullback, that separation off the moving average, higher high in price, and I want that entry right below that low. Now, one really cool thing about breakout pullbacks is the breakout leg is the measuring leg. Right? So we take the size of the breakout leg, we pin it off that low, and that now gives us the objective up overhead. If you want to make more money, don't trade more often. Get better at leaving your runner, right? And maximizing those winners. Trade number 3 out of 4 trades I'm watching for tomorrow is a breakout pullback. It is a strong pop-up, one leg, two leg. Again, measured move goes a bit too far. That failure into bear trap combination, leave that runner for that measured move. Now, before we talk about the fourth trade here, let's slow down for a moment because we've covered a lot so far in this video, and I know that most of you guys watching right now, you know these patterns, you know why we love ranges, how to make money with failures and traps. But if you're watching for the first time right now, this might be a brand new strategy for you, a brand new language to learn. But don't you worry, I teach this entire strategy. I have hundreds of examples of failures, traps, and a whole lot more. Guys, I cover the entire system in our free video classes. I'll put a link up top there for you, upper right-hand corner. Grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where to find the best winning trades each day. More importantly though, I want to help you time better entries, start making money on your own. I'll teach you 4 my favorite entry patterns, traps, failures, and a whole lot more. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best entries right now, if you've lost your confidence in your current trading strategy, hit that link up top. Take that free video course, learn the roadmap. It's perfect for anyone who is serious about making money in these markets. And also don't forget too, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links down in the description. Start there first. We trade together every morning, 8 o'clock Eastern time. I'll put trade room membership links there for you. And also too, if you're on Twitter or X, I post a lot of videos and charts and mindset stuff throughout the day. If you're on Twitter X, give me a follow. Again, all the important links you'll need on the description of the YouTube video. So we've talked about 3 out of the 4 trades I look for in a bullish range we're seeing right now. What is the 4th one? It's a fake out breakout. We know that ranges love to rotate. So how could I short off this high right now? That's a great question. There's actually 2 types of reversal patterns, 2 types of fake out breakout patterns I'm looking for tomorrow. One is called a crown reversal. If you understand how ranges work, this is really not a great place to be a buyer. But if I can get the buyers trying once to go higher, going lower, trying twice to go higher, it's a lower low in price, a move right above that high. We barely missed one today on the S&P. We got one on the Nasdaq, but barely missed one on the S&P early this morning. Nonetheless, though, this is what I call a crown reversal pattern. Nice strong red candle closing below that 21 EMA. Notice it's the lower low in price because buyers want to buy low. Again, not a great spot to be a buyer. I wouldn't mind pulling back and then buying back up, but not a good spot to be a buyer right now. One way to trade a fake out breakout off this range is to use what we call a crown reversal. Now, that is my favorite type of reversal off the high, but it's not the most common. What happens a lot of times is we wind up running lower and grinding back down again. Watch closely. This is a little more common of an entry pattern. If this thing V-tops off the high and begins to grind going lower here, where does it want to go? It wants to complete its rotation. If you learn one thing from these videos, it's that ranges love to rotate. We know where the market wants to go right now at that point. Now find the entry. Anytime we see a market grind, just like I went out and draw a trend line, grind higher, right? Find that trend line like that bear trap entry. We said it earlier. If it rolls lower and begins grinding down, all we do is draw the trend line off those lows. We pin it up around the highs. And what do we always say in our free video classes? Look left, find some prior swings. And what you want is you want that bull trap off the high. In all reality, this could be any of the entry patterns you guys are learning in the free video course. It could be a bull trap, like I'm showing you here. Oftentimes what happens is we get above the 21 EMA. The buyers get long above that 21 EMA. That is, of course, a failure pattern. Failures lead to pullbacks. And again, we know where the market wants to go. It wants to rotate back other side of that trading range. That is the 4th entry pattern I'm looking for tomorrow. These are very simple patterns, right? The key is as it rolls lower, don't chase after it as it runs lower, right? Wait for the pop up, short the bull trap, short the buyer failure, short the pullback combination, and leave that runner as we go. Now, I want to grab the Nasdaq here in just a moment. I've covered my 4 favorite patterns for tomorrow. Let's talk about some variations. For example, one of my favorite trades for tomorrow is that run down and buying it back up again. We talked about having a failure pattern at that low and then buying it back up, right? Okay. A very common variation of this is that if we don't get that 1, 2, remember down here, I can buy low and have a good risk reward ratio like that, right? I can risk small to earn large. But a lot of times what happens though is it'll bounce really hard off that low because there's so many buyers that want to buy down there. And what ends up happening is we go 1 try and 2 try like this. See, I don't want to buy up here because then my risk is there, my reward is right there. This is not good. If it bounces hard off of that low, I want you to start thinking about buying as low as you possibly can. And to do that is always going to be with a trap pattern. You see, once I get the signal candle I need, now my risk is there, reward is right there. Do you see how that small adjustment in the way you take that trade, you can build a career, a profitable career off an entry risk reward profile like this, rather than waiting to buy as it goes higher because you're simply not going to get the risk reward that you need. So if it bounces hard off that low, look for traps. Also, too, a lot of times what happens is it'll bounce hard off that low and begin to grind going higher. Now, we talked about this earlier on, right? Anytime a market grinds in one direction, just simply mark off those highs, mark off those lows in this case, look left, find some prior swings, and whatever you do, don't miss that first test off of that low. Now, again, this could be a bear trap. I love bear traps. And again, you'll learn about bear traps in that free video course. It could be a failure pattern, a pullback combination. I can't teach all the entry patterns in these short videos, but again, I go into a lot more detail and I have a lot of examples of those inside the free video course. So again, I want to roll lower, trap the bears in, but hey, if I don't get it right, I'm going to look for that bull channel, and don't miss that first test. The first test is always the best test. And then one final variation on this, we'll grab the Nasdaq here in just a moment. We oftentimes do get a rundown. We oftentimes do get 1, 2. Let me saw back here today. It'll pop up. But because the strength of that move down is so significant, every once in a while, it'll roll over and retest that low. This will be a winning trade, right? It'll be a 1-to-1, move stop up to point of entry. It's a winning trade, that's no doubt, right? But the problem is, though, it doesn't keep going for us, right? It rolls over and retests that low. Now, when I was a new trader, I was always confused by these. What I've learned over almost 20 years of doing this now is that in a bullish market overall, like we saw earlier on the 60-minute time frame, these double bottoms are a gift to the buyers. Because think of it this way, anybody who sells short on that pullback, they're going to take their profit and become a buyer at that low. Sellers up here become buyers down here. So buyers re-enter the market down there basically from profit taking off those sellers. Now, think about this. As this price begins to pull back, this is a horrible spot to be a seller, right? You don't want to sell low. We all know this, right? You want to sell high. But I'll tell you, when I was a rookie, I didn't think like that. I simply chased these things over the place, right? I'm sure you made the same mistake before as well. This is a great spot now. Trap them in again. Remember, I have no crystal ball. I don't know how far that will go. What I do know, though, is when it pulls back to that moving average, there's no way I'm going to sell right there. And anytime I can see a spot where you shouldn't be a seller is usually a good spot to be a buyer. My favorite way to time the entries on this is trap the bears in, let them try a couple times. Remember, think about this. This puts their stops right there for you, right? Now think about this. When you get stopped out of your short trade, you're buying your way out. Guys, these are setups where everybody is a buyer, right? The bears who sold short there, they're buying their way out, taking profit. Buyers are going to buy here because that's what buyers do. It's the range above us. And once those bears get stopped out, bam, sellers become buyers as well. Now remember, if you want to make more money, get in the habit of adding to your position. An easy way to add to your position is to look for that bear trap combination. What was it again? A shallow pullback, a higher high in price, right? And of course, we have that bear trap right below that low. So again, I want to get that run down, trap the bears, and squeeze back up. And hopefully it's as easy as we saw this afternoon. But in the event of getting that first trade off and then rolling over, this has to go so much more to the downside. This would be a breakout and a bearish reversal. Trap those bears in. These double bottom retests are oftentimes the best trades we see each week in our trade room. And again, in the free video course, these are called failure patterns into bear trap patterns. Trade that rotation. Trade that rotation. All right, so now we know my 4 favorite trades in a bullish range like this, along with some variations to keep in mind tomorrow morning with us in our trade room. Let's now go grab the Nasdaq. The Nasdaq it's virtually identical to the S&P right now. We have on the 60-minute time frame, we are bullish overall into a range. Ranges act like magnets. And like I mentioned last night on the video, it does look like breakout leg number 1, measured move down, back into a previous breakout pullback zone. We should be looking to make our way now back up into that range up overhead. Bullish market overall, but very bearish in the short term. Expect the sellers to keep trying to whack this back down. It's one of the most important clues we have on the higher time frame. But again, we're not trading off time charts tomorrow in our trade room. We trade off tick charts, a 4,000 tick chart here on the Nasdaq. And you'll notice the same basic thing. Bull market up into a trading range. Ranges love to rotate back and forth. We talked about the 4 types of trades to look for on the S&P. One is a shallow pullback using the bottom of this channel. Remember, in this situation, it's risk reward ratio that is the problem. And how do you solve that problem? It's always solved with a trap pattern. And again, you'll learn about traps inside the free video course. Traps are going to give me the ability to take a small amount of risk and a bigger amount of reward rather than a straight failure pattern where you're buying up here. Now your risk is there, reward is right there. No bueno, right? So a shallow pullback, I always want that trap. The more lucrative potential trade would be a bigger move down, right? Get down into the lows of this range and buy it back up again. Again, I can't pick a bottom on that, right? I don't know how far that sucker will go. What I do know though is if we find our way all the way back to that low, that's the last place you want to be a seller. So think about that. Failure. Remember, 2 tries. Why 2? Because that rope's in the bears. Now we get stops to use, right? To squeeze those stops. It's a failure pattern. And remember, it's always that bear trap combination. Remember that separation off the moving average, right? Separation equals strength. Separation equals strength. Separation equals strength, right? It's very important. Look for that separation for that trap pattern. Separate off the moving average and don't miss that bear trap failure pattern into trap combination. Remember, oftentimes these will roll lower, double bottom, and do it again. Oftentimes these will bounce hard off that low. If it bounces hard, focus on traps, right? To keep your risk reward in line. And if it really bounces and V bottoms and grinds up like that, these are easy, right? These are easy. Mark off that high, mark off that low, and don't miss that first test off the low of that new channel. These are my favorite types of trades off the lows of those trading ranges. Also too, right? This is a great example. All of that momentum off that low here, if it really punches up, right? Remember that 2-legged pullback? 1 leg, 2 leg, remember that earlier? A bit more than a measured move. Again, I don't know how far that pullback will go. What I do look for, though, is a bit more than a measured move. That will give us the general area to look for the entry. Then we wait for the pullback. Wait for the pullback off that moving average. Once it pulls back, trap those bears in a couple times. Use those stops to fuel that move going higher. That's that failure into trap combination we love so much in our trade room. Higher high in price, right below that low, separation off that moving average. And remember, one great thing about a breakout pullback is the size of that breakout. That's the measuring leg. Pin that below that level right there, and that tells you how far to leave that runner target. You want to make more money, get better at holding on to your winners. Breakout pullbacks make it easy to know where the market wants to go. And last but not least here, we are running into a lot of resistance overhead right now. During that move lower, how would I sell something like this? There's two fake out breakout patterns, right? One was a crown reversal. It's buyers once, buyers twice. It's that lower low, very important lower low. Look over here, had a beautiful one towards the end of the morning this morning, right? They pulled back, buyers once, lower low, right? Lower low, trap high right there. It's no wonder, it's no surprise why everybody whacked that sucker right back down again. It's the exact same pattern we'll look for here. Once again, we call these crown reversals. They're basically a bull trap with a nice strong red candle closing below that moving average. And again, one variation of that would be if we were to just punch back down and begin to grind going lower. We know what grinders mean. They tell us to mark off that low, find that channel off the high, look left, find those prior swings, and grab that bull trap. Grab that buyer failure off the top, and again, leave that runner because you know where this thing wants to go, wants to rotate back and forth. If we're lucky enough, we'll get down to those lows tomorrow, trap those bears in, and whoop, right back up into that trading range. That's why I love ranges so much. Once you learn how rotation works, I'll tell you, the sky is the limit for your trading. All right, guys, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the easiest way to start making money in these markets is to learn and trade along every morning at the opening bell in our trade room. Once again, I'm going to put all the important links tonight in the description of the YouTube video. Start first on the free video course. Use live chat. Any trouble getting access to the free video classes, hit us up on live chat or call the office. Most folks, though, love that free video course. Hope you guys learned a bunch in the video here tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon and trade with us in the morning trade room, 8 o'clock Eastern time. In the meantime, as always, my name is Joseph. Thanks so much for tuning in tonight. Thank you so much for watching. Be well, be nice to each other out there, and be here tomorrow. Adios, amigos. Bye for now.